so far we had discussed about in order to create a ledger. Yeah, walaikum assalam. So in order to create a ledger, we need 4 C's. So far we had discussed at length about the chart of account. Today we will be discussing about the other C's. To start with, we will be talking about the currencies and the related conversion rates for it. So can anyone tell me the currency which we attach to our ledger when creating the ledger, what it is called? It is same
local
as
currency or base currency?
Yeah, base currency or
local currency?
No. In Oracle Fusion terminology, same as EBS, we call it as functional currency. So the currency which we attach to the ledger when creating or when defining the ledger, it is called the functional currency. And any currency which is other than the functional currency, it's called local currency. It's called foreign currency. So, for example, we had our head office in United States, and you are specifying that USD is your functional currency, so you would be attaching it to the ledger while defining the ledger itself. So what happens if you make any transactions in a different currency other than US dollar, which is a foreign currency? So for that, you need to define the daily conversion rates in the application, because ultimately what will happen and what is the requirement of the business, that whatever reports you get, whatever transactions you will be seeing, finally the accounting, everything, you need to see the numbers in your functional currency. So from now onwards, when we talk functional currency, you should be understanding that it is the base currency of that ledger. Okay, so now conversion rate type, you can define as many as types as required by you. For example, if you are doing some conversions, then you may need to define period end rates. You need to define average rate. So you can define as many as rate. Normally the standard which has been followed is to define period end rate, average rate. We also used to define corporate rates, and corporate rate we used to make a bit of default. You can name it, or in various implementation we call it different rate, but corporate rate is a standard rate for which when an end user enters a transaction, because we consider, let's say our base currency or functional currency is US dollar, and you are entering a transaction in Qatari Riyal, which is a payable invoice. So system needs a conversion rate to calculate that what should be the amount in US dollar. So for that, there is a placeholder. This is the exact, actually there will be a screen I will be taking you through separately, but this is the screen where you can upload it into the system, the exchange rates, and it can be mass upload using this functionality. So, but in case, for example, there are certain cases where, or certain business requirement as such, where they say that we are not sure and we want, or because of some reason, we want to enter a user enter rate, or user will be entering the exchange rate each time he is booking the transaction. If there is such requirement, system gives you a flexibility that you can select the rate type, add user rate, and you can enter the rate manually over there, giving you one of the business scenario. Let's say in one of our implementation, we had seen that they deal a lot in Japanese yen. Their functional currency is, let's say, in Qatari Riyal, and they deal in Japanese yen very frequently. And the daily exchange rate which they used to upload also, they cannot enter transactions. The reason being, many a time, in order to hedge their risk, they used to enter into an agreement with the local banks that up to this amount of yen, our rate agreed is this particular rate, irrespective of whatever is going on in the open market. So that is the reason when they book any payable transaction or payable invoices or something, because they know that in a month they have to make 2 million payment, for example, in Japanese yen. So they used to agree into forward rates, and they prefer to enter user rate to avoid any kind of differences in the accounting and having foreign gain, exchange gain loss differences and all while doing reconciliations. So any question on this slide on currencies?
I need you just to elaborate more on the rate types and what is the best practice for the different rate types other than the manual and the fixed rate type.
Yes.
Why do I need different rate types? Just elaborate more.
Correct. So when we do, for example, and actually we will park onto it because I have a use case where we will be demonstrating, and I'll be talking a bit more about with some exact examples on it. So we will hold on this particular thing because now only in a couple of minutes we'll be discussing on that use case where I would be explaining what is the big. But to tell you, I told you, like, there is something called as period end rates. There is something called as average rate, average monthly rate or average rate. But while defining the type, you can name it the way you want as per your accounting convention. You can define as many as rate type, but these are the standard ones which are required when mainly you have some conversions in the sense you have your head office in United States, but you have a branch office or a subsidiary which is in UK, having the base currency of GBP. So when you do the conversions, there you have, like, for all the balance sheet items, you might be using the period end rates. But for all the nominal account, which is the expenses and revenue, you will be requiring the average rate of the month to be entered instead of the period end rates. So these are the main reasons, but we have a use case. I will be giving specific examples, but these are the most of the cases. Okay. So this is the screen. Anyway, I will show you on the application much more about it. The next thing, calendar. Whenever you are defining calendar in the application, you need to define the calendar at least 1 year before your current financial year. This is the bare minimum. But let's talk about many more scenarios. Normally what happens that you must be having an ongoing business since long period of time. You may be on your legacy application or any other application, and you are migrating to Oracle Fusion Cloud. So in that case, you need to check, like, whatever is the oldest open transaction you will be entering into the system. Based on that, you should decide that what should be the start year of your calendar, which should be defined. And many organizations, they even go 4-5 years back, 2 years back, to define their calendar based on this particular, we can say, based on the open transactions. In some of the implementations, they make a decision that they will not create open transactions, or they will not migrate the historical transaction. They will just create the open transaction and they will upload it on a certain particular date. For example, if you are going live on 1st January 2024, then you may cut off 31st December 2023. All of your open payable invoices, open receivable invoices will be entered into the system on that with that particular date, with some DFF or some of them based on the requirement. We do a lot of things when migrating the open balances. But if you are doing so also, always, and in that case also, you will be definitely uploading at least 1 year of your trial balance which is the last year full trial balance into the system. So it is advisable that you define at least 1 year, but it can be more than that, which is 2 years, 3 years, or 5 years based on the requirement. You can define calendars. System supports weekly, monthly, quarterly, yearly calendar. But most of the implementation, they go with defining monthly calendars only, because you can segregate easily what is the transactions and you can have controls over it. But as Fusion is also been implemented nowadays by various small and medium sized organizations, if they do not have the requirement, sometimes they go with quarterly closing. Sometimes some of this very small businesses, they go with yearly calendar only, yearly closing, because they do not have such audit requirement and things. So what they do is they need a flexibility. Even if post-dated transaction, they should be able to do in the past period and all. They even go with defining some yearly calendar. But at least a medium size or bigger size organization, they go by monthly. I'd never seen any organization going for weekly, but system supports that. If you want to have weekly close, system will allow you to define calendar which is weekly. When you define your calendar, system will ask you an option: do you need an adjustment period? If yes, then how many adjustment period you need? So you can offer, for example, yearly 1 adjustment period, which is the standard normal best practice. But some of the businesses, if they have some really requirement, they can go with 4 adjustment period at the end of each quarter, so that whatever is the and anyone can tell me what is the real benefit of defining this adjustment period, especially at the year end.
Actually, this is the period 13 that we open, or period 0, where you do
Correct.
adjustment entries, which does not belong to specific date.
Correct. That's a correct answer. And as you mentioned, we always call it as period 13 mostly in Fusion rather than period 0. So this is the period 13. And what happens many a times, like if let's say an organization is a listed organization, a big entity, sometimes they also do not prefer that they close their December books on a certain date. And the auditors start their auditing processes. They extracted the trial balance. They do their particular auditing works. And in that period, no one wants that you reopen the period and make some adjustment if required, because you had came to know what is the dividend you are receiving from your subsidiaries. There is something which is coming from outside, or there was some adjustment which was missed out to be entered, missed out to be recorded in the previous year. So it's not a good practice that you open the past period. System allows you to open the periods. So you open the past period and do the adjustment over there. It is a best practice. Do all of your adjustment in the adjustment period. And this is the only period which allows you to have overlapping dates. Now, what we mean by overlapping date is that when you define the calendar, let's say you are defining January as a period. So you will put 1st January to 31st January is my January period. For February period, you cannot specify that my February period starts on 31st of January and ends on end of February. So because there is an overlapping day between the two, system will not even save that particular save that calendar for you. But in case of adjustment period, you can define that the last month is from 1st of December to 31st of December. And this adjustment period will be for 1 day, let's say 31st December to 31st December. Although it is overlapping, system allows you to do so. And there is a valid reason for it, because ultimately you want to record the transaction in that particular year only, instead of going to the next periods. Different calendar can be defined and attached to different ledger. It is not necessary that you need to define one calendar and assign it to all ledgers. You can define for each calendar a different sorry, each ledger a different calendar that we will be discussing in one of our use case also, where I will be giving you a use case where you would be telling me that how many ledgers we need to define, how many legal entities we need to define, how many BU we need to define. I have a use case for discussion today on this. Any questions on this slide? I think all would be clear here. Okay. Now, how many types of ledger does Fusion General Ledger or Fusion GL supports or system allows you to create? You can create a primary ledger, which is the standard main ledger. You can define a secondary ledger. You can define a reporting currency ledger. Anyone can who have EBS experience, the concept and things almost remains the same, but anyone can explain a bit what is when we will be required to define a secondary ledger or a reporting currency ledger?
Hello, assalamu alaikum.
Walaikum
For the
salam.
secondary ledger, when you have requirement, for example, in different GAAP or for IFRS or any different currency or any different chart of account, the 4 Cs, when anyone from the 4 Cs is changed, we need to create a secondary ledger. For the reporting currency, if you need to generate your reporting and balances in different currency. For example, if the functional currency is USD and you want to generate in euro, so we need to create reporting currency.
Exactly. And mainly the secondary ledger, what is the standard practice is that out of the 4 Cs, if you are going with if there is a requirement to have a different chart of account or calendar or accounting convention, which is the US GAAP or the IFRS, for example, then you go for secondary ledger. And when the difference is only on the currency, you go for reporting currency only. So out of the 4 C, if the 3 Cs are different, go for a secondary ledger, and the currency is different, then you go for a reporting currency ledger. Okay, but your answer is absolutely correct. Okay, so this anyway, any questions, because your use case will be based on this, where I would be asking like how many ledgers and things we need to define. But let's look at this structure for understanding perspective first of all. Then I will give you that use case for us. So in this, just to give you one basic information, then you can put a thought onto this flow. The business head office, the headquarter is based out of United Kingdom, and US and India have is the places where they have branches, but they are registered legal entities over there. Okay. In this diagram, just focus on, let's say, the first 3 primary ledgers, which is the India primary ledger, US primary ledger, UK primary ledger. What do you see in India primary ledger and the US primary ledger? What is the difference between the two? In terms of 4C, just notice that.
The currency.
Other than currency?
I guess same. I cannot see different than the currency.
No, calendar is also here. Maybe it is not clearly
Calendar is
visible.
different also.
Calendar, yes,
It's
calendar.
India
Yes.
Yeah,
monthly
UK,
calendar, and the second one is UK monthly calendar. Between, I just say India and US. Let's compare at least these two first. So why? The reason is, if you must be knowing that in India, the financial year starts on April 1st and ends on 31st of March. Okay. But in US, it is Jan to December. In UK, it is Jan to December. Correct? So that is why we have the calendars are different. The currencies are different. It doesn't need any explanation because each of the country, they have to report to their local authorities. Taxation is there, income tax department, like a lot of indirect taxes are there. So they need to do a lot of filing and reporting. They need to have the primary ledger in their respective local currency. So their functional currency is for India INR, for US USD, for UK GBP. For the calendar, for India we kept different, but even for US we use the same currency UK monthly calendar in both the cases, because both are following Jan to December. There is no reason to define or use a different calendar for them, correct? All of the three are following the same convention or the accounting method also we say, which is IFRS. All have a chart of account which name is THIN, 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 that is just any name you can say, but all of them are using the same. Now, as your head office is based out of UK, we need that because ultimately the holding company or the headquarters have to report their numbers of all their subsidiaries also. So there is a reporting requirement and thing where they need balances in GBP. That is why what we did, and now look at the two boxes. For India, what we created, and for US, what we created. Can anyone tell me what is the difference? You can take a minute to see.
Same.
Same? Are you sure?
Exactly.
No, the currency is different. The currency is different a little bit, right?
No, GBP. Same. Both. Secondary. You mean the secondary ledger.
So for India, what we created?
Currency GBP for secondary ledger, you mean? It is currency GBP, UK
Exactly.
monthly.
But for US, what you created?
Same, currency GBP.
No,
No,
but
you
it is not a
created
secondary
reporting
ledger.
Reporting. This is a reporting currency.
Exactly, exactly. So
أحسنت
there I
يا
need
محمد
your
صالح.
attention. So in this case, if you look at, because I just told you in the previous slide, if your other C's are remaining constant, so because we need to compare between the head office and the branch. So UK, our calendar is same, our accounting method is same, our chart of account is same. Only currency is different, right? So we should go for a reporting currency. So that's why a reporting currency is defined, and we need the balances in GBP. Rest all remains the same. But now anyone can tell me why we went for a sub ledger in for a secondary ledger for India?
Because of the period, this calendar UK monthly, right?
Exactly. So here the difference. So in that case, there is no need that for currency you go and define a reporting currency also. For the calendar is different, you go and define a secondary ledger also. No. If any of the other three C's are also changing, then no second thought, go ahead and define a secondary ledger with the required currency also. Okay, this statement, this example which I had given, any question till this point?
Okay, in case of US, just to standardize our work, we can do a secondary ledger for US with the same information, or it is just we have to go with reporting currency.
System allows you to do so, but it doesn't make any sense to go with because but system allows you. You can go ahead and define a secondary ledger. System doesn't stop you.
In case just for future use, in US current calendar, we make a US monthly calendar, not UK monthly. I know it is the same, but for future use, maybe US change their calendar. Maybe, I don't know if it is allowed or not. So we can go for another also calendar. Then it is a must to go with a secondary ledger instead of reporting currency.
Exactly. That is true. But we do not have to forget that if, let's say, that their calendar is changing for any reason, let's say, because you define first time a calendar which is Jan to December, but US tax authorities and all, they decided we will switch to let's say July to June. Okay, if they do so, you have to define a new ledger. You have to, because if any of the C's changes, there is no way that this ledger can be usable in future. You need to define a new primary ledger later on. You got my point, right?
Yes, yes.
Okay, because it would be some sort of a mini re-implementation for this particular entity only. Okay. Then now you see the dotted line, which is, let's focus on the consolidation ledger. So in this consolidation ledger, we are bringing the values from where? We are bringing the value from the head office, which is UK primary ledger. We are bringing the values from US reporting currency, and we are bringing the value from India secondary ledger. Because here, everything between the three are same, correct? All the 4 C's are same. So there is no issues in consolidation. You can pull all the information in consolidation ledger, where you can have like one view from this place. You can get the reporting for the whole group of companies. Okay. Stats consolidation ledger is also there, but it is more about using in allocation and all. But I will touch base on this later on when we will be defining some, or we will discussing on journals. But up to consolidation ledger, any confusion, any doubts?
But what is stat stand for? Stat consolidation ledger.
Actually, we call it as a statistical journal. So what happens is where the currency is mostly a stat. Okay, which is so mainly it is used for some allocation purpose and things. But I will be touching base. I will be showing you on application and some of the use cases of it separately. It's a completely different topic.
Okay.
But you can focus still in the consolidation ledger. Okay. And yes, on this slide, because there may be a requirement, okay, and if you consider, let's say, in this case, what is the currency for stat? But I will be showing and explaining you separately for the stat currency. But here the stat is something different, which is the statutory actually consolidation ledger. For management consolidation, you can have a separate consolidation. For statutory, you can have a different consolidation. Okay, so the same, but the hierarchy and things might be different in this particular ledgers. But here the stat means statutory, because the currency is GBP, the currency is not stat journal.
Just a question here regarding the consolidation. This setup should be done in a Vusion, although we will use
this is completely within Fusion, and this is the way, like if you have, as I explained previously also, if you have the case where there is a simple consolidation, because let's say the US operations, the India operations, they are 100% subsidiaries, there is no complexities between them. It is much more easier that you define this management consolidation ledger is also defined in Fusion, and you run the consolidation, bring all the values to consolidation ledger, and you if required, you can have some elimination JVs. We pass many times some elimination JVs means if there is some buy and sell of goods or services between UK and India. Okay, so they say like, so it is a kind of, you are inflating your revenue just by selling and buying between the two entities. So many of the tax authorities, many of the reporting authorities and stock exchanges, they say this way you are just inflating your revenue. So they do pass some eliminations, and that is why they used to go with some statutory consolidation ledger, where they would be doing all of the elimination in the management consolidation ledger, they will not do this because they want to see actually how much UK is making, because there would be real cases where UK and India are both making money just by trading or between themselves. Okay.
Fine. Okay. Go ahead.
Okay. Now, instead of going into configuration screens, now it's time where you need to kick in your thought process. Let me share my screen.